Hey, it's Matt with PriceActionTradingSystem.com, and it's Wednesday. It is August 22nd. This will be our chart lesson for today. And there was an FOMC announcement at 1 o'clock today. I did mark this trade at 105, and I'll explain that in a minute. Generally, you want to stay out, and you can see how flat it got that last hour before the announcement, and that's relatively typical of what you'll see. People are, just waiting on that news to come out, and they're scared to commit either way, and then usually the market will get really tight. I mean, that's extremely tight, but that's not uncommon on an FOMC day. So um, the news didn't really affect the market a whole lot. We spiked up momentarily, spiked back down, and then suddenly we were right back where we started from. And generally the market will, if there's a big news movement that moves the market in a big way, it will suddenly, usually before that day is over, it'll take all that, it'll bounce back and kind of reset and start over. And that's what we did. We reset back to that point and started over again. And that's generally typical of what'll happen when a big news item kicks out there and creates some volatility like that, and a volatile move. But a couple of interesting notes I wanted to show you. Notice the gap right there over the trend line. You see that over and over. For whatever reason, prices will gap over those areas, and you can see it closed on its low, opened on its high, and continued down, and it never backed up and overlapped. People always get confused on that when I say gapped. But notice most every bar overlaps, even if it's only a tick or so, and those two bars do not overlap. It just closes on its low, and the next one skips a tick and opens up, and it never backs up. Like most of the time, it will back up and fill that gap or whatever. So, and it didn't there. So I'm trying to look and see if there's one real quick that I could show you that did that, but then filled the gap, so to speak. Yeah, I don't see one really off the top of my head here. Here's one right here. Let's see if we can see this. This bar closed on its low, and then this one opened one tick below it, and it looks like it might have ticked down a tick or so, but then it traded back up and inside this bar, so they overlap. If this one would have just kept going down, it would have been a gap between the two bars. They wouldn't overlap. That's not a great example. Here's one. Notice what happened here. It was so weak here that it skipped two or three. It closed right here at this level. I just want to show this because so many people get confused. That bar right here closed. You can see at 28.62. Well, then prices didn't open until 28.61.75. So there's a couple of ticks in there. But notice prices started backing up and overlapped and traded all the way up to here. So those two bars ended up overlapping. There's no real gap there. There was momentarily, but it filled it. Well, this particular situation right here, it never filled this until prices traded back up higher again. And that's probably why they came back here before going lower, because they were trying to fill that gap. And, the market does not like, here's another one right here. It opened on its, no, actually it didn't. I take that back. This thing traded to here, so never mind. There's one right there. Look, it closed on its low, opened on its high, but it ended up backing up a tick and overlapping a tick. So hopefully that makes sense to most people and you understand it. But I get a lot of questions about that. People get confused when I talk about a gap, and they just don't quite get it. They don't understand what I'm talking about there. So hopefully that clarifies that for those of you that are fairly new to this. But the other important thing I wanted to show you before we talked about the trades was the repeat pattern today. And I just wonder how many of you saw this pattern. But notice right here, you're in a little range and you gap up, or you break up and you come back down. It sells off instantly, then bounces. Same thing right here. takes off, breaks out, quickly sails off, bounces. Same thing right here. Quickly takes off, backs up, bounces. Same thing right here. Quickly takes off and breaks out, backs up, and this one didn't bounce quite the same way, but it still bounced. Most of the cases they just traded back down temporarily and then bounce. This one actually just shoots right on through and then bounces. But it's the repeat pattern there multiple times during the day today. And so once you saw it happen once, you could probably sell this one and buy you could sell the failed breakout and then buy the bounce every single time. Sell, buy, sell, buy. Where's this one? Sell, buy, sell, buy, sell, buy. And so once you saw it once, every time you saw it, you could have done the same thing. And because generally the outcome will work out the same. So thought that was interesting today. But I'll get these little arrows off here. I just wanted to show there's one. So it happened here, then it happened twice, third time, then a fourth time. And then it really happened again over here. You're kind of going sideways. It breaks out, fails, bounces. It wasn't much of a bounce that time though. So it wasn't, still did the same thing. Let me get that out of the way and we'll talk about the trades here. But we were really kind of going sideways when I came in. We had that little failed breakout. This is tempting to sell, but at this point we still had a trend moving up and we're making higher highs and higher lows. We did have a little temporary double top there. And then you had a little two-legged move down. It doesn't break higher here, but there's two legs there. So this is a hidden second entry with a nice bullish bar. First break of the trend line. We're probably going to try to retest the top. Notice that we got a double test of this level right here. We tested that level once, twice, and then we had this quick double test. So there's a lot of reasons to buy that right there. Hoping that maybe we go higher. Probably at least try to make a new high here. And we may test the overnight high, which is right in here, and we actually went on past that. I figured we'd just try to retest that overnight high right across there again, but we went on higher. And notice we got a little trend moving up, break, couple of moves up, and it sails off. There's a lower high here, but it's right into the EMA. I was a little leery of that one. We do have a new high in place. It's a fairly bearish bar. You really didn't have a good trend line set there. That kind of set the trend line, but this was basically we pushed through, pulled back, and turned down and got a big bearish bar. Even though it didn't break higher here, that's still like a little reversal pattern, and it is right off that trend line with a key entry. So I like entering that one. And notice this is one that gapped, but it did back up and fill the gap. So even if you had to use a limit order here, you would have got filled. You got it in there quick, and that's why I like to trade with, do my trading on the chart with my mouse instead of trying to use a DOM or whatever. And I never have liked that DOM. People ask me about it all the time. I just think it distracts you. As a price action trader, we're a visual trader, so don't waste your time with a DOM. Just learn to, it's one or two clicks with the mouse in your trade. So. We're continuing to move down. You want to draw this trend line here off the first couple of swings and see if we come back to it, and we do. And we really make a little double bottom with a little tick. This is not a very good signal bar. This is an inside bar, so you could have gone long right there. Your stop still would have had to go below here. It's at a key entry point. It's just not a very good setup. I marked it green, but I just didn't, I don't think it's a good enough setup to make it blue. And then of course it looks like this, a lot like this. We get that breakout, it suddenly fails and pulls back, it rockets down real quick, and then you get the bounce. And so when it bounced off that key entry point, even though it wasn't a great signal bar, I still liked it. Just simply because it was a repeat pattern. And because it's off a key entry point, and even though it's not a good signal bar, you're looking for a reason to try to enter it if you can. And I think the fact that it was a repeat pattern was good enough. And if it hadn't been off a key entry point, I wouldn't do that right there. But it's off that key entry point, and look, every time we've come back to it, we've taken off. And look where all the big moves come from. I talk about this all the time. Where did the big move come from here? Off the key entry point. Where did the next big move come from? Off the key entry point. Where did the next one come from? Off the key entry point. That's where your big moves are coming from. Where did the big sell-off moves come from? Off the upper trend channel line, which is your opposite key entry point. And generally we don't call that a key entry point because generally you don't counter trend trade. But when it's continually swinging above and below the EMA, here it's starting to look like a trend. So I'd be a little bit more leery about going short. But then we're back in it right here. So you can trade it both ways. So just keep that in mind. As long as we're swinging back and forth above the EMA, even if there's a trend to some degree, you can still trade it both ways if you're reading it, if you're reading the price action well. So when it bounced there and it was a repeat pattern with a key entry point, I liked it. Right here, notice that we're moving up, and we just came across the midline, and you're almost always going to pull back and test that midline before you go higher. And notice we made a low, we tested it once, we tested it twice, and then we bounced right off the midline. And so I liked with that double test. Normally I probably wouldn't have liked this trade either, but with it being a double test off the midline, which again is a key entry point, with the EMA behind it, strong support. Look how many times, 1, 2, 3, 4, 5, 6. This is the 7th bar to test that. So I wouldn't use this for a signal bar, but I would this, a break above it. But your stop has to go below this bar. And this one's real close. You could argue for this to be green because it is congestion here. But with all those tests of that low and the fact that that's the first break of this trend line, plus the fact that we're bouncing off that midline, we should be headed up here, and that's what I was looking for, another move up to the trend channel line. Of course, we don't get there. We kind of falter, but that's what you would be looking for prices to possibly do. And then it pulls, of course, then you get the breakout. It looks just like this. So I like to sell it, and then it pulls back, and then you can and then it takes off again. You get the bounce just like here and here. And so there it is, the third time. And really you could argue for this one to be blue. And it is a failed second entry short too. So if you saw that, notice there's a low here, lower, and it's first entry, second entry, it fails. So really you could, if you saw the repeat pattern, you could make that blue. It's real close. I'll be honest with you, I like the trade. So, and then of course we sell off. You make the high, make a lower high, and then you make a failed second entry long right here. And so when it broke below that bar, just go short. And at this point, you figure it's coming back to here at a minimum. And we just kind of get back into this. And this takes us into the noon hour. You don't want to enter in all this stuff. It's not worth your effort. If you'd have gone short there, it is off the key entry point. It's the first entry. But really, this is just stretched over here. So I wouldn't want to take that right there. It's too risky right into to that support. And then by the time you really get a failed breakout here and a bullish bar that you might consider going long on, you're right into the 12 o'clock hour. So do you really want to risk that? I mean, this bar closed at well, your inside is 12.16, so that's why I really didn't like marking it. It's too late there. And of course, you got two legs up, and there's that pattern. It breaks out, fails. Get a chance to go short. It rockets down, and then of course it bounces. You couldn't have got in on this bounce. Notice there's your gap again. It closed on its high, opened on its low, and it never backed up. So you could have got filled on a limit order where your buy stop would have been, but I don't think you would have on that. You definitely wouldn't have backed up and filled you at a lower point. And so you wouldn't have probably caught that trade. And then you don't get a good signal bar here. And this is really the repeat pattern. And this is not exactly, even though it looks 100% the same here you went on through where before you bounced every time. And you didn't really bounce this time. It just kind of kept going. It eventually bounced, but it looked a whole lot more bearish before it bounced this time. And I would have drawn my trend line here, and notice I gapped over it there. That's why that gap's there. I was trying to figure out why that gap was there, but as soon as you draw that trend line, now you know why it's there. It gapped over that down trend line. And you'll see that over and over and over. It usually tells you got the trend line in the right place. So keep that in mind. But that took you into the 2 o'clock hour. And this was right at 13:05. But when I say 13:05, I should say 1:05 Central Time, because at 1 o'clock was when the news item came out. And so this wasn't a real big move. This is just the repeat pattern happening. So it didn't look real volatile, even though you did get a relatively volatile move. That's still minor for an FOMC kind of announcement. So you might have ridden that one down. And but you might have been a little leery of that one being at just right after 1 o'clock. But 5 minutes into it, and we hadn't bounced any, nothing crazier than that's happened. I wouldn't worry about it. I'd just take the trade and move on. So anyway, that's what I saw today. Learn to look for those repeat patterns, and because generally, whatever the outcome is the first time you see it, you'll get the same outcome over and over. And this right here was really a repeat pattern of this as well. I didn't really talk about that, but it's a repeat pattern too. It's very similar, coming back down. So that's another one. You might have considered taking this short earlier, but I'd still probably wait on this one. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. But I hope you had a good trading day. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.